this is Brian Neal with TradeToBeFree.com, and today I want to go over some of the recent trading setups that appeared in the alert service and show you what's working right now. And if you're missing out on these opportunities that are coming up, you're probably missing some of the biggest gains in the market. So it's really important to keep on top of what's working well in the current market. And right now you'd have to say that semiconductor stocks that are having good earnings out of really good basing patterns are doing really well. Here's a great example of that. We've had a few of them recently, but Corvo was featured on Thursday evening, and this one I want to show you because sometimes these bullish patterns set up not on daily charts but on weekly charts over several years. So if you look at this chart here of Corvo, you can see this cup with handle pattern that's developed over the past 1, 2, 3, 4, 5 years, okay, with a long handle. All right. And sometimes these larger patterns like this will develop, and if you don't look at a long-term chart, you won't see them right away. And if you get in a situation where a certain industry is starting to turn in terms of the stock prices, anticipating better news ahead, if you don't stay on top of those industries and look for these longer-term patterns, sometimes you'll miss these opportunities. And so we noticed that Corvo had this really long-term basing pattern and just came out with very good news on the earnings report, where they beat on the top line and the bottom line by a large margin. We can see here on a wider chart that when it came out with the news, it also raised guidance significantly, and that was key. I think by about 10% or so in the next quarter. And so they raised guidance, they beat by a wide margin. They were breaking out of this very long-term basing pattern, okay? And it took off. You can see that this is off to a really good start out of that very long base pattern, and it has the potential to go up further over the days and weeks ahead. Now this is extended now on a short time frame, so it may come back and test the top of the prior consolidation, which is right in this area here. If we take that chart back to the weekly chart, we'll see that has that resistance up in here, and so we may see it come back and test this area, maybe come back to the 9 or 20 EMA, and then maybe have a bullish candlestick pattern off that, and then take another leg higher. Okay, but that's a very good start out of a long base with extreme volume as it breaks out, and those are really good signs on a breakout. Okay, so that was a great either short-term swing trade or a good start to a long-term swing trade, and we'll have to see how the long-term swing trade continues here and see if that makes that second wave higher, which has a good chance of doing. But usually when you get that first 4 to 10% or so on a trade like this, we usually want to take some off, stop it a little bit below the breakout point of the pattern, which again is in this area here, $87 to $88. So a little bit below there perhaps, and make sure we profit on the trade. If we look at other opportunities here that we recently featured, we have another. I was going to show you another one here, LRCX, which is another semiconductor-related stock. This was featured the end of last week, and again, we can see this nice little base pattern set up. This is a little cup with handle, actually a high handle base here, a little bit short. We normally want to see a base longer than this, but it wasn't too bad. It had the big earnings beat again, guidance raise, and one of the keys on this trade is not only do we have the really strong pattern developing, the long-term trend developing, we also have the consolidation pattern, okay, and then the really good catalyst on top of that. And the key to this, though, is that it reaches the entry point with the catalyst. In this case, it was the break of the pre-market high again. It hit that the next day, quickly surged about 12% or so, it looks like about 13-14% perhaps or so, and it's getting really close to the final target up here in this area up here. So that's a good way to take the rest of your shares off, is a move into this high. Again, if it does so in a strong manner, you can put a stop below the prior day's low and let the rest ride until it breaks that prior day's low. Or you could just wait for a weak candle, a red candle, let's say, after it breaks in new highs. That's another way of taking it off if it continues to surge higher. Okay? So that's off to a great start. It's up about 12% right now from the technical entry point that we talked about in the alert service. And I want to get to that too. I know, for some people that swing trade, the pre-market high may not be something they're familiar with. Normally it's not that important in trading, but when you get these big earnings reports and you're looking for direction confirmation and you're looking at an economy that could be reaccelerating in the near future, or it could be turning over in the near future too. So it's kind of a touch and go situation right now in the overall economy, global economy, and also the U.S. economy. So, investors are kind of wondering which way it will go in the months ahead. Will we continue to see a slowdown, or will we level off or reaccelerate? Okay. And one of the keys right now is to see confirmation that the company is handling tighter margins better, okay, and that they're seeing a sort of slowdown or a consolidation period and then a reacceleration in their business, all right? And those are the companies that are going to be receiving a lot of investment dollars going forward, as they usually do, but more so right now because, again, there's a lot of changes, a lot of shifting sands right now in the economy and industries, and investors are wanting to see that sign that these companies are going to be the leaders in the months and years ahead. It's very important right now. The company can go one of two ways: either continue to go up and improve, or it can start to decline. And with a slowdown in the economy that is showing signs of leveling off and may reaccelerate. But again, the companies that do well right now in these earnings reports over the next couple quarters, I would say, stand a really good chance of being the leaders in the months and years ahead if the economy continues to hold up well and either do that or reaccelerate in the months and years ahead. Okay, so we want to see price direction confirmation. We want to see a good catalyst out of a very good basing pattern. Okay, and that's what we're looking for right now. And we're seeing great success if it has, the great earnings report, if it has the great consolidation pattern, and it reaches the technical entry point that we talk about in the alert service. We want to see all those factors. Okay, so not just the long-term catalyst in terms of the strong growth rates in earnings and sales, not just rising estimates with beating those estimates over the past few years, but also a fresh catalyst on top of that and that bright price direction confirmation. Okay, so the way to do that in a lot of these trades is to look at the pre-market activity, and I want to show you that here on different platforms so you know how to turn that pre-market activity on, and so you can see where that pre-market high is. Okay, so I'm going to show you that in Yahoo Finance, and I'm also going to show you that in Thinkorswim, which is a very popular platform. And now that we have zero commission trades, it's a platform that's getting more and more attractive versus things like Webull and Robinhood and other brokerage platforms, because not only do you have the great tools and the really good swing trading platform, you also have free commissions now too. So it's a very attractive trading platform to use. It's also very busy too. I've noticed in the past week that I've been having problems getting market orders executed around the open, more so than usual. And it's probably because they're really busy with new clients. They had a 50% increase in new accounts recently because they dropped their commissions down to zero. So there'll be a few snafus, I'm sure, in the weeks ahead. But over time, it's been a great platform. And I want to show you how to turn on that pre-market activity now. So I'm going to pause the video here and set that up so I can show you. Okay, I want to show you now how to turn on pre-market activity here in Thinkorswim. Okay, and there's a couple ways of doing it. You can go through the menu options, right-click, and you'll find settings. If you go down to here, style, settings. Okay, that's one way to get there. But there's also just the gear icon. You can click right here. All right, and then once you go into the chart settings, all right, you just go to equities, and then you click on show extended hours trading. Okay, and I've got highlight extended hours trading session because I want to see the difference between the pre-market action and the action during the day. The pre-market activity isn't as important as the activity during the day. Normally you have lower volume during the pre-market and after session trading, which goes on from about 4 p.m. to, I believe it's around 8 p.m. Eastern time. Okay, and then the pre-market activity starts early in the morning. I think it's around 6 a.m. 6 a.m. Eastern time, and if we go into here, we can see that it actually starts around, looks like around 5:30 a.m. Eastern time. Okay, so, but that shows you the pre-market activity, and then what I want to look for is a break of the pre-market high. So when the market opens, I want to see the pre-market high broken. Actually, the pre-market high in this case was up here at $92.16. So once we see a break of say 10 cents, around 10 cents above there, that's an entry point. Okay, that's when we want to jump in, and we can see here that that pre-market high held very well, and it often does on the best stocks with the best pre-market patterns and the strongest pre-market patterns. Okay, most pre-market patterns aren't good enough. Most pre-market patterns are kind of worthless. All right, so it's only the strongest ones I want to look at with enough volume. All right, and the best opportunities in the market from a swing trading perspective. So the long-term chart is very important, and the trading pattern on a daily chart is very important. Okay, then I want to dive into the pre-market pattern if it's strong enough, and in this case it is. Okay, so we saw the break of the pre-market high, which was 92.16, occurred right after the bell. Sometimes you'll get a sell-off early where it'll come down a few percent or so from the pre-market high, turn around and come back through the pre-market high. That's okay too. In this case, it broke out right away, and if we have our buy stop order in a little bit above that pre-market high, we want to know what that is. Okay, so if we know what that is before the bell, we can put that buy stop order in a little above there, and in this case, it's off to the races. Now, if we're well above the stop loss point at that point, if we got a great catalyst though, and if we're still liking this trade a lot, like the news, okay, we can put a stop, let's say 4 or 5% below this point if we're looking at a longer-term swing trade. If we're looking for a day trade or a short-term swing trade, we can tighten that up a little bit more, okay, below that pre-market high. All right, what we don't want to do is we don't want to chase this. We don't want to go too high above that pre-market high, okay, because there's a good chance at some point it's going to come back down and test that area in the days or weeks ahead. All right, and again, I only use this information on just the best trading opportunities in market conditions that are okay. All right, and right now they're okay, and we have low volatility too. If the volatility is too high, I won't use this strategy, this technique. Okay, but that's how you turn on pre-market activity in Thinkorswim. And if you don't like to use that kind of online trading platform, and right now it's free, so I don't know why you wouldn't, but I'm going to show you how to do that also in Yahoo Finance. Okay, so if you don't want to bother setting up this platform, you can do that too. You can use Yahoo Finance or other free information online, and I'm going to show you that as well here. Okay, here I am in Yahoo Finance now, Yahoo Charts. You can just do a search on Yahoo Finance Charts, and it'll come up. I just typed in Corvo, and when I first typed it in, this is what comes up. It's a daily chart. It looks like over the past 6-8 months or so, it looks like. And again, we have a gear icon here for settings. All right, and then if we click on extended hours, that should set up or show up. We may have to click a shorter time frame. Let's click on 5 days here. And yes, so once we do that, we can see the pre-market activity. And again, we can see that pre-market high right here. And then right before the bell, it went up a little higher. And the high was actually up here at 92.16. So we can see that ahead of the bell. All right, and then put our buy stop order a little above there if we like this trading opportunity a lot. And then again, if we're well above our stop loss point, at that point we can put in that tighter stop loss in after the trade. And we can see that again, when you have this really strong long-term consolidation pattern, you've got a big catalyst, a company that's had some challenges over the past year or so, okay, but prior to that they were doing very well, okay, and that's key. All right, and we have that long-term earnings growth rate in the double digits still, even with the slowdown over the past year or so. Okay, and we have this really strong acceleration that appears to be going on right now. This reacceleration, okay, and the breakout out of that that long-term chart pattern on a daily chart and weekly chart over the past few years, okay? And then we have this pre-market high here that can give confirmation that we're going to trend higher, at least in the short term here. All right, so that hit the first target easily in the earnings eruption strategy today. So for a short-term swing trade, you can look for maybe a break of the high again on Monday, and then look for a move into that high to sell for a short-term swing trade. And then if you're doing a long-term swing trade, if you're going for the longer-term target, you can take some off there sometime on Monday, and then raise your stop for the longer-term swing trade. If you missed this, no worries. You can wait for a pullback back to a key moving average, let's say the 9 or 20 or even the 50-day moving average. Another very good way to play this. Wait for that price to come down to the 50-day moving average, which may take a few weeks to do that, and then a strong candlestick pattern off of that. And that's, thinking of stocks that we recently traded using that strategy, waiting for that first pullback to the 50-day moving average on these top stocks. Roku did that earlier this year. We had that in the alert service. It had a really nice candlestick pattern off the 50-day moving average, held that very well, and then made another 20%, 25% move within a couple weeks off that bullish candlestick pattern off that 50-day moving average. So it's another way to play top growth stocks. This stock really hasn't, proven that it has that kind of growth, that Roku has. It appears like it may in the months or years ahead, but we'll just, we'll have to see how the technical patterns play out in the weeks or months ahead for a good secondary entry point on this breakout. So, okay, that's about it, guys. Want to also show you a couple other ones here. We had AEM. I know a lot of people like to play, trades that set up below the 52-week highs. They want to play these pullbacks and look for these good consolidation patterns back to, say, a 50-day moving average or some other, channel breakout, let's say. And we had AEM recently, and we were saying that, again, we want to see a break of this consolidation pattern. In this case, it's well below the 52-week high. Okay, we want to see a break of that, all right, with a catalyst, and that might happen within the next week or two on earnings. And sure enough, it happened. We got the good earnings report, all right, and reached the entry point early that morning, okay, and then moved 12% within a few days, within a week or so, moved about 12% higher. So another good trade there. And I also want to show you sort of the difference between that and, a typical breakout, which normally isn't that great. Okay, right now the breakouts, unless there's some kind of new news for the stock or the industry, or very strong catalyst for the overall market, which we're really not seeing. We're kind of seeing this slow grind higher in the market. Now we're breaking new highs in the market, so it may get better. But recently, over the past few months, unless you had the great consolidation pattern on a great stock, the stock reaching the entry point with the new catalyst, and we've been, harping on that over the past year. We want to see the new catalyst at the point of entry. We can see that Chipotle, for instance, had the catalyst, but it didn't break the pre-market high. Okay, so you didn't get that direction confirmation like you got with LRCX and also with Cuervo. Okay, so we want to see the big institutional money coming in, rushing in to buy the stock, and we just weren't seeing that with Chipotle. It didn't break that pre-market high. It actually didn't break the all-time high. Didn't break out of this consolidation pattern. Okay, so you didn't have the price confirmation that we were telling people to look for. Okay, had the catalyst, was a good catalyst, good earnings report, and good outlook. Nothing wrong with it. Okay, but it just didn't have that price confirmation. Okay, direction confirmation that we want to see right now. Okay, it fell short of the breakout point and it pulled back, and we've seen that a few times before the past few months where you have a seemingly good catalyst, okay, but it just doesn't meet all the criteria in our strategy, okay, and then we just back away and move on to the next trading opportunity. All right, so it's important not to fall in love with a stock. especially if you're trading. Okay, we want to see the price direction confirmation. We want to see the catalyst. We want to see the great consolidation pattern, the great long-term trend. Okay, and in this case, Chipotle just didn't have the price direction confirmation. Okay, and we saw the same thing with, let's see, another one here, Amazon. Yeah, Amazon just didn't go up and break out of this double bottom pattern. Okay, just didn't make it there. In their case, their earnings report wasn't the best. I mean, they had I think a revenue beat, and so the business is still going well, but they put a lot of money into their one-day delivery service, and the margins are being pressured in other ways too. Okay, and there just wasn't the price confirmation on this trade because of that, and the catalyst wasn't the best anyway. So didn't reach the entry point. The catalyst wasn't great, and so we backed away from that in favor of LRCX and Cuervo. Got a nice profit on that, and holding the rest of that for the longer term swing trade. So yeah, so that's why we keep mentioning that it's not enough to have a great stock, a great consolidation pattern, and the price on a good catalyst. You know, you want to see the price reach a good technical entry point. You want to see the catalyst. You want to see everything lining up in this market. And if it does, magic can happen, and it often does. We're seeing, you know, if we go back and look at, the October 14th weekly alert, we can see that, you know, both CNS, okay, had that catalyst, had the breakout. Here it broke out a little early, okay, so that's okay. If we can see the catalyst coming later and the price direction confirmation, which we saw here, that's great. Okay, that's a 20% move within a couple weeks from the technical entry point. Okay, and of course AEM, we talked about that before. That had the same combination of factors as well. So it's important to have a great strategy and to use the strategy well when you're trading. You know, for long-term investing, it isn't as important, although a lot of these stocks that get off to the great start with the great catalyst and have a great technical entry point that's reached, they often make a big move in the long term too. Not always, but they often do. And so we want to make sure we wait for that really good technical entry point when swing trading, and keep an eye on these stocks too for a potential long-term hold in some cases. That about wraps it up. We have some more great information in the alert service, more videos in there. We also have the blog with updates on the current market, and also our favorite strategies and tips and insight on how to use those strategies. And it's a great starting place, you know, for those that are, you know, just following the blog and the YouTube channel. You can go there and start to learn or develop your own strategy and begin to test it over the months and years to a point where you're consistently making money. Okay, so again, that's about it for now, guys. Best luck in your trading, and we'll talk to you again real soon.